Okay, looks like that we're working. Let's now share screen. Oh, that's super. Hello, everybody. Good to be with you. Hey, Brian, check out that futures comment in Discord. We'll have a little look if we've got time, which we should do. Hey, Dan, Fauzi, Felix, good to see you. Guy, good to see some of the risk event guys turning up. Werner, welcome. Jacob, Richard. Hey, John. All right, folks. Yeah. Hi, Anthony. Alex. Right, folks, let's get stuck into the session. Right. So we're on the cheat sheet. Couple of things. First of all, on the cheat sheet this morning, just coming out sort of 8:30 UK time, we had that S&P 500 buy bias at market. Okay. Now that's fine to hold through this PC event. It's expected to be low. It's expected to be a non-event, but just to be aware of the risk. Okay. That the risk is that the PC print comes in higher than expected. If it does come in higher than expected, that's an immediate exit. Right? No problem to hold it through. Expectations are that it should be low. We have had the CPI print, we have had the PPI print. Those that calculate the PCE print from the CPI and the PPI are saying that it's on track to be there or thereabouts, still showing disinflation process at work. And remember, the Fed's less focused on inflation right now. So inflation, although has been super important for us, is now slightly less important. Okay. So that's just to get that out of the way. So the S&P 500 buy is still in play. That's absolutely fine. If you are nervous, you could always take profit, move to break even just before the release. Now, the PCE print at 1:30 is the event, alongside the Canadian GDP released at the same time. Now, there's a good potential opportunity here, so it's definitely worth us covering. And it's also worth covering the US and the Canadian GDP together because there's a potential opportunity together. So let's go through the detail. A low print is expected for the US PCE print, right? Nick Timraos, who maps the forecasters and the analysts who are looking into this in great depth, and they can see that the CPI and the PPI should mean the PCE is a mild print in July. They're expecting a core reading of 0.15% and an annualized reading around 2%. So a large drop is expected. And that's just seen as expected, right? Now, if we see an even larger drop than is expected, then look for a little bit more downside in the dollar, right? Now, there's a slight, if you look at this, what we need to see the surprising everybody, okay? We want to see this coming in below market's minimum expectations across the board. And if we get this a surprise to the downside, little red lightning bolts, then we can know that's a good opportunity for further dollar selling. Let me just give you the narrative. This is the narrative going into the event, right? The Fed are expected to cut interest rates 4 times this year. That's what short-term interest rate markets present. And the expectations is that the next move in September, that there's a 33% chance of a 50 basis point rate cut. Remember, there's only 3 Fed meetings between now and the end of the year. One in September that was coming up. Then there's one at the end of October, beginning of November. It sort of spans the 2 months. And then the third one in December. So you'll notice 3 decisions, but 4 cuts expected. So that means one of the decisions has to be a 50 basis point rate cut. So the Fed, and you can see here that rapid repricing after the last Fed meeting, they have made it explicit. They are now pleased that inflation is falling lower, and they're shifting to the second part of their mandate, which is maximum employment. Right. So this is the big picture. Right. Right, there we go. Look at the inflation rate. It is falling lower. Headline inflation, the Fed's pleased and anticipating that to go to 2%. You don't wait to 2% to cut interest rates, because if you wait to 2%, you've done it too late. There's a lag between the interest rate move and the impact in the economy. That lag is around 12 to 18 months. So what you're doing, if you cut now, you're hopefully doing it a year, 18 months in advance, right, of when you actually need to do it. So this is the time to cut interest rates. Inflation's falling, and you can see, look at the core reading, Fed's going, hooray, hooray, hooray. Inflation is moving lower, right? So this is a reason for the Fed to be reassured that they're winning the inflation battle. Hence, we've seen that market pricing of 4 interest rate cuts, right? So, and that's the reason. Now, the Fed have also now signaled that they're concerned about the labor market. And we've got more information about the labor market. So this is the headline non-farm payrolls print. The US has been adding jobs to the economy steadily. The Bureau for Labor Statistics made a revision from March 23 to 2024, said, actually, you thought the US economy added 2.9 million jobs. There's only 2.1 million jobs. Still adding jobs, but just not as many. Okay, so this labor market may not be as strong as markets had assumed. If you look at the jobless data, you can see initial jobless claims, they're broadly trending higher. You see, the trend is up for the initial jobless claims. And then for the continual jobless claims, you can see, well, trend is up. Okay, so there's a weakening in the jobs market. What can you see? Continuing jobless claims trending higher. Initial jobless claims trending higher. Non-farm payroll jobs trending lower, right? So now, and remember the Fed's dual mandate, maximum employment, stable prices. So they look at inflation and say, yes, we are getting stable prices. Then they look at maximum employment and say, labor market's weakening. We need to focus on this. So how do they encourage employment? They cut interest rates. They ease conditions monetarily for both US businesses and the US consumer. And that prospect of monetary easing is what's been helping both the dollar lower and the S&P 500 higher. And that's why we had that nice expectations of upside in the S&P 500, bullish piercing line pattern, very, very strong bullish pattern there. You know, testing up at these highs, 5640, 5650, very, very reasonable. And it's not unreasonable to expect a retest of these highs as long as the PCE print comes in benign. In other words, as long as there's not a big surprise to the upside, right? So that's the big narrative. The problem with it is that this narrative has been running for some time. It's a bit old. So in order for this to be really significant, and remember there's a delay on this, if you're following the live stream, you want to see this come in 0.0% for the month on month, 2.4% for the year on year, 0.0% for the month on month, 2.3% for the year on year. Surprise to the downside. You want to see the revisions unchanged, okay, or lower. Now, there's another opportunity with the CAD GDP at the same time. The Bank of Canada, they've got a problem. Around 50% of Canadian citizens have not renewed at the higher interest rate levels on their mortgages. So there's about 50% that are due to remortgage. And when they remortgage, it's going to be a much higher rate. In the US, people take 25, 30-year mortgages. Here in the UK, the most popular mortgage is a 2-year fixed rate. So there's a much closer kind of tether point between an interest rate hike and how it affects the economy. In the US, there's still people stuck on 25, 30-year mortgages at like whatever ridiculous rate you used to be able to get. So Canada, 50% have to renew at the higher levels that are around now. So that's difficult for them. So if this comes in well below market's expectations of 0.6%, right? And we see the month on month coming in below minus 0.2%, look for downside in the Canadian dollar. Now, what we have to look for here is if this PCE print comes in very low, then that will weaken the dollar, that will send yields lower, and that will strengthen the yen. So if we see a miss here and a miss here, then we look for CAD yen sellers. Okay. Miss there and a miss there, you look for CAD yen sellers, and we look for an obvious target. First target, the S1, ultimate target, the S2. That would be only in the situation where we saw a big miss in the Canadian GDP and a miss in the PCE print. Okay. Now, if we see very strong PCE print, if this comes in 2.8% or higher, if this comes in 2.7% or higher, say this comes in green across the board, then what we'd look for is immediate downside in the euro US dollar. Okay. If it's just a pure miss here, right, red lightning bolts, it's euro US dollar upside. If it's green here and green lightning bolt, it's euro US dollar downside. Look at the revisions. If we see very, very strong print here, okay, dollar strength, and you see a big miss here, then that will be CAD weakness. So you look for dollar CAD upside. I'll be working this through as we go. For those of you who want to take a quick screenshot of what to expect, here it is. Otherwise, I'm going to be here making sense of it, okay? So we're going to look at the headline first. I'm going to turn the... And then we'll look at opportunities in the E-mini. E-mini wanting to break out, just sitting below highs of the day. Just want to make sure this is all right. It's expected to be benign. Okay, and that's what's reassuring markets in the run-up. It's expected to be a benign print. In other words, weak. Now let's see what we get. Okay, 20 odd seconds of making sense of it. Remember, you're not only looking at the headline, you must also look at the revisions, because the revision can undo the headline. So let's have a look.
10 seconds to the bottom of the hour.
Okay, here we go. All right, let's see what we're getting here. Okay, that's a beat. So just hold that in your mind, but not going to do anything with it. We're waiting for the PCE data.
0.2 month on month in line.
That's low.
5%
okay?
unchanged. We had expected
There's
2.6.
no clear opportunity there.
The estimate
right?
and the prior.
But that does mean if you're long the S&P 500, you can hold that S&P 500 long.
0.3 above the
Okay, that's absolutely fine.
Consumption.
So the S&P 500 long to hold, no problem.
Annualized GDP 2.1% above the expected 1.6.
That is a surprise to the upside and a prior revision. So you could see some CAD strength, and this is dollar weakness. So you might see some dollar CAD downside, but I don't want to chase the dollar any lower. And I'll show why I don't want to chase the dollar any lower, because just look at where the dollar is on an index level. Let me just show you. So there isn't anything tradable there, right? S&P 500 long, you could re-enter longs now if you wanted and hold to the end of the day. All right. So here you go. You see the dollar? It's right at these levels here, at this low support level. You know, everyone was expecting a low print, okay, from this PCE, and that's what we've got. We've got a low print. You know, so there's no surprise. There's nothing obviously tradable there at all. Let's look at the CAD at an index level and see how the CAD's operating. CAD's showing us a little bit of strength. The thing is, this doesn't change the big picture. See, the strength is very mild. It's marginally better than expected, but it won't change the outlook that the Bank of Canada will be cutting interest rates. So there's nothing clear with conviction there either. So the only thing that will be interesting is a potential swing trade opportunity in the euro US dollar as we move forward. So let's have a little look at that, right? So you see the euro US dollar is falling that support level. This is a very nice area to potentially look for buyers down here. So we'll be looking for opportunities to go long the euro US dollar from this area. We don't want to get involved here at this area. Okay, it just doesn't make sense. So let's now look at the futures market in the E-mini to see where there's opportunities to go long in the E-mini, right? If for those who are intraday trading. Okay, so what we've seen, We've seen pretty benign print. I'm just going to check the headlines, check I haven't missed anything. It all looks pretty weak. Yeah, you can see, yeah, 2.6 below 2.7 expected, 2.5, that's pretty much what was expected, wasn't it? 0.2, 2.5. So the Fed's winning the inflation battle. Does it change pricing at all? Let's have a look. It's unlikely to be more than 4 interest rate cuts, right? So look at this, updated 15 minutes ago. Let's just see if we've got a fresh update on this. A few seconds ago. Lovely. Do we have any change? No. Do we have a slight tick up? Slightly less chance of 50 basis point cut. So minimal. Okay. So maybe a little bit of dollar strength, tiny weeny bit. Yeah. So there's nothing tradable there. Cool. Doesn't change the big picture. Doesn't change the narrative. All it does is sets up the jobs print for the non-farm payroll next week. That'll be a huge event. Huge. Right. This NFP is going to be massive. Okay. And we've got ADP jobs that set the mood on Thursday as well. So jobs in major focus, inflation in less focus, and look at the way that the market has reacted. Hardly, just a few ticks in the S&P 500. Let's look at the euro US dollar, just a few ticks, right? Look, it's hardly moving at all. Dollar, not moving much at all. Gold, few ticks. Do you see? This isn't the market that's really, super focused on that. So inflation, less of a focus we kind of expect. And CAD GDP, we were only looking for a weak print. We've seen a strong print. Look, the Bank of Canada are going to cut interest rates anyway. It doesn't matter if it's a bit higher than markets are expecting. So it shouldn't change much. And you've got the month on month coming in slightly lower. So you've got a bit of a contradiction there. Right. So what do we focus on? That S&P 500. Remember from the cheat sheet, the S&P 500 long, that's still fine. Inflation should fall. Tick, yes, it is. There's less impact from the PCE print now anyway. Yes, it is. Fine. The Fed's looking to cut interest rates. Yes, they are. 4 interest rate cuts. Nvidia earnings out the way. No major headaches there. There's the end of month effect. If you look at the end of the month effect, you see markets tend, first day of the month, what you tend to see is upside in stocks. If you look over the last 25 years, right, S&P 500, first day of the month, from the day before to 3 days after the end of the month, there is a bias for upside of 0.5%. From the day before the end of the month, the day after the end of the month, 0.34%, 60% winning trade. So there is a bias there of upside. Okay. Now, what we're looking for now is potential upside in the S&P 500. So let's go and have a look at the futures market. We're seeing some moves taking place. So this is going to be exciting, and we can look for fresh areas of interest. So we'll be expecting gains in the S&P 500, right? So let's see what we got. So we're going to look at this from the top down. So first of all, where can we see? Price has moved up to the point of control for the week. Okay, that's the point of control. That's the most place where the most amount of price and contracts were transacting was here, up at that 5636, right? We've seen price potentially make an attempt at a break to the upside and now pulling lower. Okay, now don't buy that, right? At all. Just hold fire. We have trapped sellers here, 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 and here. So there's a big bundle of trapped sellers, and the market's coming into those trapped sellers now. So this is a decent area here to look for a potential reversal, right, in the S&P 500. You can see, because you've got sellers, they're all trapped by those buyers there. These buyers are in control, and they will remain in control until you see these or these buyers getting trapped. At the moment, they're being tested, right, these buyers, but they're fine. And this is an area we see a reversal. So we're in a key reversal area, and we were there earlier, and now we're back there. This is also the volume weighted average price. Now, if you look at this on the 15-minute chart, and you look at the daily chart, you can see here the value area low from yesterday was here. Value area high is up there. And you can see that this region here, right, is this value area going across all these days here. So we're in a key area where you expect, if you're going to get buyers, you'd expect them to step in at this level here. So you've got trap sellers, trap buyers. Right. So now we're starting to see an area of interest for us. We want to see buyers or sellers trapped. Right. So this is a 15-minute chart. You've got buyers here, buyers there. The buyers are still very much in control. We had the trap sellers from earlier in the session. Okay. They're still trapped down here. In order for price to move lower, you want to see these buyers, those buyers are trapped. So at the moment, you see those buyers and those buyers into the PCE print, they are currently trapped. Okay, so we've got some buyers trapped. And if this closes on the 15-minute chart below that area, then all of those buyers are trapped, and you can see a little bit more downside in the S&P 500. And then you look for buyers around that 5620 area, which is the value area low for the day as we head into the New York Open. Okay, so we're looking for buyers here, we're looking for buyers there. Now let's have a look, go down to the 5-minute chart. Let's see what we got. Okay, so where have we got the sellers? So we have buyers up there, they got trapped, move lower, buyers there, trapped, price move lower. They got shaken out with the PCE print. And often you'll get this kind of, that's a false break of that level. And the price is going to, we'll end up probably wanting to go up that way anyway, and that's just a false break at that level. So what you can look for here is a place where these sellers get stuck. So where's a high volume of sellers? You've got a high volume of sellers there. Look on the 15-minute chart. You've got potentially high volume sellers here. Okay, so you can see the buyers stepping back in, and what's happening there is this is a defense of this area. Do you see earlier in the session, you had sellers trapped, sellers trapped, sellers trapped with this candle here. So the buyers are defending this 5627 level, and that's the obvious area. So you can look on the 30-minute chart, right? If this closes above that high, above this body, that means that those buyers are still actually in control on the 30-minute chart. All right. And what we want to look on the 5-minute chart is look for sort of sellers starting getting trapped. So at the moment, you've got buyers trapped there, there, and there. So that those buyers aren't trapped, those buyers are still fine. These buyers, they're still fine. So the only buyers that are trapped are these ones up here. Right. So that means if you see this high getting taken out, then that will indicate further upside. If you see this level getting taken out, then those first lot of sellers are trapped. So for me, I'm going to zoom out to the 15-minute chart and see how it develops. Okay. But this is the kind of, so the area to look for trap sellers is down 5630. And if that breaks, look for 5620. Okay. So is the S&P 500 buy bias still in play? Yes, it is. All right. Yeah. So if you see it, did you see how, for those of you who were earlier, we did that. I showed you that trade that I took early this morning from here to here, right? And imagine if you were managing that, Brian. So let's just run through it. Okay, so you got the S&P 500 long. I had a second entry here about 5625. I was just missed out on it, right? So you're long there. So let's see. So you got buyers here and here. Okay, buyers are in control. You get first lot of sellers there. Have they taken out the buyers? No. You get more buyers there, more buyers there. Buyers are firmly in control. You got sellers there. Have they managed to take out any buyers at all? None. Buyers, sellers. Have they managed to take out any buyers at all? Moot. Have these managed to take? Yes. So here, this candle has taken out these buyers here. Okay. So there's a potential downside. You saw buyers coming back in, but it didn't take out the sellers. And then when you saw the sellers, they were coming in. These buyers here, look, you see that seller here took out these buys, and those buys. So this candle took them out, and that was when you got a flush lower. That was predictable. Okay, you can see a flush lower there. And then, oh, look at this. All those sellers taken out. right? So those sellers are taken out by these buyers. They're all trapped. And you've got sellers there. They're just sort of, they're not taking anyone out. You've got sellers here. Have they taken out any buyers? They haven't taken those buyers out, right? Do you see? And then you've got buyers, 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 and the buyers are still very much in control. And now the buyers are trying to take out this on the 5-minute chart. Okay, it's this is what you want to see cleared out, really. Once that gets cleared out, then there's a potential for a nice move up. So all in all, that's what you'd expect. This is the area you would expecting from buyers from. At that volume weighted average price, and it's still fine to hold that till the end of the session. Okay. Okay, for a fiddly one today, but at least we've been able to get that S&P 500 on the way. Yeah, a lot of info today. It has been a lot, and it's been fiddly because just don't forget the big picture with the Fed. You can make this really complicated, and I can show you loads of charts, and it just gets ridiculous, really. You know, people have got jobs and lives to do. That the big picture is basically, in a nutshell, is this. Is the Fed going to cut 4 times this year or not? That's what it comes down to. Is the labor market slowing or not? That's what it's just those 2 questions, basically. And if you just have those 2 questions, does this make the Fed more or less likely to cut interest rates 4 times this year? Is the labor market slowing? Then that will solve 95% of the questions you're going to have. Right. All right, folks, that is it for now. We'll be back on Monday. Scheduled to be back anyway. Have a very lovely weekend. Thank you all very much, and look forward to speaking to you soon. We'll update the S&P 500 buy bias on the cheat sheet for financial source guys. And anyone else looking for the cheat sheet, it will be updated. Otherwise, close at the end of play today if we haven't hit yesterday's highs first. All right, folks, that's all for now. Take care and speak soon. Thanks, everyone. Bye.